Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, yesterday, interesting day because even though those, market's still reeling from those CPI numbers and everything, we got some Fed speakers and they're still saying 75 basis points. But I think that a lot of that is like there's still some important numbers, and this retail sales number that we're going to be getting here soon is like a big part of that. So let's just come over to the markets real quick. Nothing all too interesting in the treasuries since then. They kind of bounced back up. I did have like a short yesterday, right? But that just stopped back out at break even. I think I didn't even pay attention to what was happening with it. S&P 500 did stage a little bit of a rally yesterday, though. And then we got oil. I don't know if oil is going to continue down or if it's pivoted up or what. But gold and silver still suck, right? Dollar is still strong. So let's see here. Let's come back to our main workspace here. And what we got here now is retail sales. So if that retail sales number comes in line, then I think that might be able to open up the way for, the 1% interest rate hike. We're going to get that news in about 2 minutes. U.S. core retail sales month over month, we're looking for a reading of spot 7. So if that number came out and that number was negative, then there's no way they're doing a 1% hike, right? Oh wait, what? YouTube enabled picture-in-picture, which helps me watching your channel because now I can watch the channel and my watch list at the same. Oh really? Oh yeah. Well, so I think that YouTube has always had picture-in-picture, but it was kind of like limited on what you could use it on. Like if you had content that was like music, like copyrighted music, they usually wouldn't let you do that. It was a weird conversation in Discord last night that I deleted. I was like, I don't really know what I'm talking about, but I just don't like the way that you guys are talking. So it sounded kind of. I don't think that they intended it to be racist per se, but to me it sounded racist. But I think that they were really more just criticizing one individual person. And Jax was just like, "Oh, I'm sorry. I know I can be offensive." Anyways, yeah, so it was the thing that drives. So, oh man, I shouldn't get into a rant like this when we're right about to have retail sales, huh? Let's watch here. Let's see. Okay, well, New York Fed manufacturing number is high AF. I want that alone might be a good reason to sell something. Still not seeing the retail sales number though. Nope. We still haven't actually gotten the retail sales, but I'm just kind of watch is going to be okay. It's 1%. It was 1% versus the expected spot 7. 1% versus expected spot 7. So that's probably not good for the 75 basis point hike people, right? Because I think that they were all looking for more signs of weakness. Like the Federal Reserve here is concerned that the next slate of data is going to be negative before the meeting, right? Well, retail sales was like one of the most significant data points left, right? Well, so far the flow isn't too incredibly strong down. It was about 5,000 contracts down. The S&P 500 is starting to figure out that that's not necessarily a good thing for them, right? You would think, oh, retail sales were good. That should be good for stocks. Well, not if it means higher rates. The whole good news is bad, bad news is good phenomenon that we see here when the markets are concerned primarily about how easy the monetary supply is just one of the most hilarious things in trading, I think. It's really quite nonsensical when you think about it. Okay, you want to hear my rant? Okay, so here's my rant. Music podcasts are dying. Music podcasts are dying. So it used to be I go to the iTunes podcast directory, I'd go and find Above and Beyond's Group Therapy, formerly Trance Around the World. It's actually Group Therapy is a way better name for a podcast. Anyways, go and I would listen to that every week. Never missed an episode. Okay, and never missed an episode. And then they realized that trying to do all of the copyright stuff and everything through a podcast kind of sucked. And you don't make money through the podcast because you can't directly monetize it, right? You can directly monetize Spotify plays, you can directly monetize YouTube plays. So they move everything over to YouTube. So now you want to watch not Trance Around the World. You want to watch Group Therapy. You can watch it on YouTube. They'll stream it today. Hey, it's a great show. Because around like noon Eastern time it's not noon. It's sometime in the afternoon my time. Okay, you'd sit and that's your Friday is you watch Above and Beyond, and then it's the weekend. Yay, great stuff, right? Okay. Well, but what if you want to listen to every episode in your car? Well, if you have to watch it on YouTube, that means that you watch it on your phone on YouTube, but there's a YouTube app on the phone, right? But there's this thing where like you can't shut your phone off and it will keep playing. Like you can't turn the screen off and YouTube will keep playing. It doesn't work that way, right? And with some songs, you can't like even minimize it and do something else on the phone. You want to listen to Above and Beyond on the phone. You can't do anything else. It is so effing annoying. So I'm glad that it was previously not allowing you to switch away on live streams, and now it does, so that you can watch me minimized. Because most of you probably aren't really actually watching the screen too much. Most of you are probably just listening, right? I don't know. I don't know if I got enough sleep last night. I just feel like I'm in a ranty mood. For some reason, all this morning I was ranting in my head about Star Wars, even though I haven't seen any Star Wars content or anything. It's just all of a sudden I'm ranting about how terrible Star Wars has become. Why? Why am I thinking about that? I stayed up too late talking to my wife. That's what happened. You get into that mode, you're talking, then you get in the bed and it's like, okay, now we're not going to talk. And you both keep talking. I'm talking, she's talking. We got issues with kids. We're trying to figure out we need to shut up and go to sleep. Can't do it. We can't do it. I don't know why that happens. What is it that sometimes we will get in this mode where you just want to talk and you'll talk and stay up way super late? That doesn't make any sense. Okay, well, I have to say, so far, I think that these numbers that we just got are really, should I say bad? I mean, they're really good. They're really good economically speaking, but they're really bad for if you don't want interest rates to rise. I guess if I'm honest with you, I kind of want to see interest rates rise. Like 3.25, 3.5 sounds like fun. Let's do it. I think that sounds like a fun world to me. but I digress. These numbers don't look too good. That New York Fed manufacturing is, they were expecting a negative number. It was 11. That's really good. And the retail sales, they were expecting spot 7. And I was thinking, well, they probably want that to be negative. If that's a negative, then the market's just going to like rally TF out of here, because that means the Federal Reserve's not going to raise interest rates as fast. But if it's on par, then maybe that 1% interest rate hike is on the board, right? We got 1%. So now here's the thing. We're kind of in a precarious situation here in the treasuries. I mean, I think they might continue to move down, but it could be one of those, while the real money has been made, sort of a trades. But now we kind of have to sit and wait, because it is not, Bostic will be speaking at 6:45, so in about 10 minutes, and Bullard will be speaking at the top of the hour. Let's go and look at where it is they're going to be speaking. I guess I didn't completely do all of my research, did I? Oh, well, that's because it's not on the calendar. FOMC member Bullard speaks due to speak about the economic outlook and monetary policy at a virtual event hosted by the European Economics and Financial Center. So he's definitely going to talk about that sort of a thing, and I would assume that he's been watching the retail sales and is willing to comment on it. It looks like the guys that are like, nah, it's still not going to be enough to make them do a 1% interest rate hike. Maybe they're winning out here. How should we manage the risk on this? Let's say we'll do minus 1,000. Oops. Only 5 contracts. I should have taken some off when we were down here. I was kind of like, well, I do want to take some off, but I want like 2,000 profit first. So it's a little greedy. Yeah, they're flipping back pretty hard though. It's gonna hit that anyways. Let's just bail. Let's just bail. I'm trying to decide if that means that we'll have an interesting Friday or not. Now, in all fairness, it could be doing that and then like just get slammed back down, but it looks like somebody's playing the other side here, right? Like the cumulative delta has retraced. Somebody's taken the opposite trade. New York Fed hot. You mean the New York, the New York Fed manufacturing. I mean, is 11% hot? Let's come in here. Let's see here. Empire State Manufacturing Index. Well, in terms of how big of an outlier it is, I can see there's been more recent outliers. But 11 is not terrible. Hot is like 25. 25 is about as high as that series gets, going back to 2013. Yeah, wait, I'll bring it over here. You can see. Going back into like the 2017 time period, they were up at 25. This is a data series though that like was pretty consistent back here. But then when you get into like economic turmoil, it's really off, right? So that amount of a beat is last June's reading was in line, but the May reading was like a big miss. So that particular data point is probably not as significant. I mean, it's a medium impact event anyways, right? Core retail sales is the important one, right? That one was pretty close to in line. Let's look at that one, right? So we come on here and look. Yeah. Is that, are we like too crazy? No. It's it's a modest beat. The amount of beat probably not too much of a factor, but I kind of think that even if it was like at spot 7, I would be saying, oh, that's treasuries will sell off on that. That's going to mean higher rates. Let's see. They're coming back. They're kind of saying, hey Seth, you want to take it again right here? Well, Bostic is speaking now, and he just started. Inflation is too high, and we must lower it. Let's see here. News Squawk says retail sales were strong, particularly the control group boding well for GDP. Waller said he could lean towards 100 basis points if the retail sales figure was strong, but he is also watching housing data and inflation expectations ahead of the July 27th FOMC. Oh, yeah, we got U of M today, don't we? Totally forgot about. Guys, I'm off. I need to, you know what? I've been thinking I should start a newsletter where we preview those sorts of things going into the week. And I was thinking about that primarily because it was like, I should do a better job at staying on top of those, and writing a newsletter for you guys is like one of the best ways to do that. I don't think I really want to start a Substack though. I think I would rather make posts for YouTube subscribers. Yeah. Or like the people that have the $5 subscription or whatever we got. I think we should do it. Well, I'll tell you what, on Sunday night, I'll try writing that out, and we'll see how well YouTube does with the blurb like that. Might not be like, the thing is you probably want it to go to your email, right? That's where a Substack can be advantageous. What? Elon Musk says Mars may be a fixer-upper of a planet, but it has great potential. I don't get this one. I don't... Listen, everybody has this idea that you're going to move to Mars. It's going to be great. You're going to move to Mars. You're going to terraform, and it's going to be tough. But ultimately, we'll build a great society on Mars, and it'll be great. No, it's not. Mars is a crap planet. Haven't you guys ever watched Gundam? The space noids are always getting screwed. I mean, yeah, they're bad. They kind of turned into space Nazis. Okay, so we don't want to be aligning ourselves necessarily with the space noids. Okay, but they kind of got a bum deal up there in space. All the rich people, they're still on Earth. Okay? Mars ain't a fun place to live. It's also a really long trip. Right? Why do you want to go to Mars, Elon? Here's what's going to happen. You're going to start a colony on Mars, right? You're going to move over there. first thing you're gonna do is build a spaceship and fly back and then just stay here on Earth because you need to be able to do it for all of your administrator duties. But we all know it's way more comfortable here on Earth, man. It is going to get hot, though. I mean, I'm worried that it's going to get hot. I don't know. It's just this year. It's not too hot. It's still like in the 90s. Better ping to the CME. It's like a 20-minute. That's like a 20-minute ping, right? Can you imagine that on Mars? You want to go and read Zero Hedge? Takes 20 minutes for the page to load? Heck no. I couldn't do it. There's not going to be that much internet on Mars. They're not going to have the good stuff. They're definitely not going to have the good stuff. Right? The internet is such a weird thing, man. I got to tell you, yeah, the internet existed when I was 14 years old too. My kids, they seem to be under this bizarre impression that like their parents don't really understand the internet or anything. Like, look, kids, the internet was the thing when I was 14 years old. I know what 14-year-olds do on the internet. And like the thing is that when I was a 14-year-old on the internet, there wasn't like all of these walled gardens like Facebook that like 99% of internet interactions happen on. Really, it's Reddit. Man, I don't think people realize how much of the activity on Reddit is coming from like kids and teenagers. So it's like these people in politics, you're like, oh, well, how are these people so crazy? It's because they're kids. They're kids. That's why they seem so stupid. They're kids. You're arguing with a child, guys. Like, right, I only go to Mars if I have an edge. Well, but the thing is maybe you're entering into a new market, though. That's kind of the draw, isn't it? It's just, I'm not so sure that's the market you want to be in. Okay, so like, look, we got micro treasury futures, right? There's a real opportunity here. The pricing for benchmark interest rates is not actually that good. We have, just from the introduction of these micro treasury futures, basically increased the accuracy of benchmark rate data that is available. And I hope that it only gets better. So there's an opportunity there for that, I think. It's just kind of like, who wants that opportunity? Well, I'll tell you who wants that. I do, because I love treasuries. And I just love doing it as a retail person. That's cool. No business person's going to want to do that, okay? But look, it's not for everybody. It's interest rates. It's not going to be everybody. It's for me. It's for me. I'm the audience. That's cool, okay? What's the audience for moving to Mars and starting a new society? Because you know it's going to suck there. Who's the person that does that? Because in my mind, the person that wants to do that, maybe not the person that you actually want to go with you. You get what I'm saying? You get what I'm saying? But maybe there's opportunity. You know, it's just like they were saying in what sci-fi was this? Where it was like, you know, once you got to the planet, you would get like a plot of land and a certain amount of money to start building the economy there and stuff. Okay. Better ping to the CME. Meanwhile, here on Earth, though, supposedly it's going to get hot, right? It's not like it's going to be awesome here on Earth. It'd be better than Mars. Like, think about the apocalyptic future that liberals envision for the Earth under global warming, which a lot of the things that you see on is not scientific based. Like Waterworld is not going to be like Waterworld, okay? Like over the next 100 years, the worst case scenario is the oceans rise like 1 meter, which is not actually that big of a deal. I mean, cities will have to build levees and things like that, but like this whole thing where like, you know, Miami will be completely underwater and everything, probably not going to happen. Okay. Rich people probably wouldn't be buying the houses there if they thought that 50 years from now they'd be underwater, right? But it is getting hot. It sure seems hot out there. And this is the problem is that whenever I look at a post-apocalyptic future in a movie, it's always cold. Right? It's like the stuff they're wearing, Okay, well, like I'm thinking like Blade Runner 2035 or whatever. That one they have the future is hot, or at least they have an area of the future that's hot, right? Because Las Vegas is a desert, right? So he goes to the desert. But if I lived in the Las Vegas desert, I wouldn't be wearing the stuff that they wear. Okay. Where people y'all up in the Northeast, okay, even frankly California, but maybe California is a little bit better. You don't know how to dress in a desert. Nobody knows how to dress. Fashion, the desert fashion is not a thing yet, except for in Saudi Arabia. But do you really want to wear those onesie things? You know, those like dress. What do they call those? I don't think I want to wear one of those. But you do want to have loose clothes that allows the breeze to go up, right? Maybe something that you can fit the water tubes in for your radiation unit. Still suits. Let's have still suits. Okay, so I don't think we saw anything too significant from Bostic. I think that the market came in here and was like, well, Bostic didn't say anything about we need to raise interest rates, so maybe he's not so concerned. Source of both higher aggregate demand and hiring other supply difficulties are rooted in the pandemic. Trying to get out of the business of looking too far ahead on policy given number of surprises on inflation and other data. Oh, I see. So they're pulling back on forward expectations. What about Utah's Salt Lake drying up? Yeah, well, it goes through cycles, but it's always been kind of drying up, right? It's not. It's getting kind of nasty out there, though. It's getting pretty nasty out there. It would be nice if it like rained. But like, here's the thing. Remember that we keep saying like you never have a supply shortage without a supply glut happening after that. That's what I'm kind of worried about. Because when I was a kid, what was it, like 1986, 87, something like that in Utah? Like the big news story was flooding all over the valley. And like they were concerned that the Great Salt Lake was getting too high and it was going to cover over the railroad and all of these things, right? So we might go back to that. It might be a problem. It'll definitely be a problem in southern Utah. If we really get rain again, there's going to be like crazy flooding down there. I mean, there's always flooding down there when it rains in the desert, but you know, it might happen over and over and over again. It might be ugly down there. It is drying up though. But you not have the people don't understand the desert fashion, right? Here's the thing. You don't want to wear dark colors in the desert, generally speaking. Like I think there's some weird science about it where there are some advantages to dark clothing, but generally speaking, if you're wearing like black, you're going to be hotter. Okay, like because it just absorbs all of the heat from the sun and it just makes you hot. You want lighter colors; those reflect the sun. You don't want white. Don't wear white in the desert because that's just blinding, right? You know, but like khaki colors, right? That's why it's khaki. You want something that's like maximum reflectiveness but doesn't blind people. There was a pretty aggressive take there at 28. I mean, I know it was only 1168 contracts, but somebody was like, "Yep, I'm going to take that," and then a bunch of people stopped out off of it. Don't forget to replace cars with camels. I wonder why camels aren't more of a thing in Utah. That's actually, hold on. Do we have... There should be a camel ranch. How Utah's ancient camel changed our picture of Ice Age. Wait, what? They've found... Whatever happened to the camels of the American West? Wait, there was a camel experiment? Is it Bostic being dovish? Moving too dramatically could undermine the positive aspects of the economy and add to uncertainty. 100 basis point hike implied odds down to 28%. So here's a thought. It's not really about whether the next hike is 100 basis points or 75 basis points. I would prefer that it's 75 basis points. I'm concerned that 100 basis points is going to be really jolting, right? What really matters is what the terminal rate is. And then if we get to the terminal rate, how long are we at that rate before they start easing again, right? I'm concerned that if the economy is fine and they don't raise rates fast, that just means that inflation remains persistent and that means that terminal rates are higher, right? Like in the short term, it goes down. In the short term, they say, well, okay, we're only going to get to 3.25 or whatever. But then that means that rates are still above 3 going into next year. Possible, right? Elon Musk is on one of those well, he tweets, Tesla is to protect life on Earth, SpaceX to extend life beyond. Like he's in one of those moods today, which is a good mood for Elon, right? But he's tweeting a lot about that stuff. He's found new purpose in life, guys. I know he was going through a hard time with the divorce and everything, but now he has regained his true purpose to colonize Mars and protect life on Earth and extend life beyond. Yes. So here's the thing. You don't want to wear black in the desert, okay? So you know what that means. It means that by 2040 or something, the goth lifestyle will not be sustainable. I just saw this on TikTok. It was a good TikTok. By 2040, the goth lifestyle will not be sustainable anymore. So we either need to invent still suits or make, gothy clothing that are khaki. We need khaki goth is what we need. Khaki. Wait, did I just invent something? I don't know what that style would look like though. Khaki goth. No, it could maybe be a thing. Look, it could be a thing. Look at this. This is a good picture. Oh, can I get it bigger? Open image in new tab. Zoom in. There you go. Look, we could do it. It could work. It could work. She just needs, like the piercings and stuff. Khaki goth could be a thing, guys. Real wages are negative. Wage spiral might occur equals higher inflation. Yes. So here's where I'm stuck at. Okay. The market is concerned that the Federal Reserve raising rates is raising rates into a recession. It's just the person. It's just one of the images that shows up when I search for khaki goth. Faux leather insert button up gothic hoodie plus size hoodie. No, but you can do the cargo pants. Look, we could possibly make khaki goth a thing, okay? Because you don't want to wear black in the desert. If we're trying to preserve our cultural heritage, people. Is that part of our cultural heritage and stuff? Okay, I got distracted. You distracted me here. I was actually saying something useful to you guys about economics. Okay, we're concerned that the Federal Reserve is raising rates into a recession. Now we have seen signs of a recession in GDP. There have been some prints that have been negative and things like that. But when I look at the bigger picture and I look at the really important economic numbers, they don't look so bad right now. Like those retail sales were not bad. And what is it that I'm seeing or that people are seeing out there that tells us that like retail sales is going to be really, really bad in September's reading? Something like that. I'm just not seeing it, right? So this scenario where the Federal Reserve has to like back off on raising rates in September or like start lowering rates in September, I don't see it. I think that they still are more likely to do what they've been saying they're going to do. They're going to raise rates until they get to around 3.25%, and then they're just going to take a break. And then possibly we continue to see a decent economy, but then we also continue to see core inflation, and so maybe they have to raise rates up to 4%. I think that that's a possibility. Retail sales should rather be called gas sales. I'm looking through here, and really all I'm getting is just pictures of khaki cargo shorts. Khaki cargo shorts. Khaki dress. I guess we could make it work though. Techwear club. This is the thing. This is what drives me. It's like not goth. It's like techwear. There's like goth ninja and techwear, and like this is a style thing. It's like the style of the future. Future's not gonna look like that. We're living in a desert. You're gonna be wearing khaki stuff, guys. I just figure it out now. How can I be my best in khaki? Well, I don't know. Did he say something? I didn't hear something new from him, but it's turning. It's turning pretty hard. It's enough that it's making me say, on Sim, I should short it. I think, though, if I'm like trading my live account, I don't think that I take a trade here. I don't feel 100% my best. It's Friday, and I'm a little uncertain how this sorts itself out. On Sim, though, I just want to click numbers. It's so much fun clicking numbers, guys. We need to find a way to make clicking stuff not so much fun. Khakis go well with guns. Sure. You want to have khaki. You don't want black guns. You want khaki camo colored guns for sure. For sure. Listen, I've more recently I've been outside a little bit, okay? And I've done a lot of research about how to be more comfortable in desert weather. Okay? You want to wear pants. You want to wear pants, but you want to wear pants that are like really, really breathable. Like you want ones that don't let the light through at all, but breathe really well. Breathe really well. That's what you want. Oh, the Hill. House to move towards a vote on assault weapons ban. Funny you bring that up, but that's not likely to pass the Senate, right? Go Commandos? No. No. What you want? Why are we talking about this? I think we're okay here. The Sax underwear, SAXX. I'm not sponsored or anything like that. Okay, but like if they asked me to be a sponsor, I'd totally be down with it. I mean, I don't think that they would get very much value out of it, but I would totally be willing to talk about their products, right? They got this underwear, okay? And the thing with this underwear is that it has like a pocket. It has like a pocket where the crotch is, that where there's a piece of fabric that will basically go in between your leg and your balls, so that your balls don't stick to your leg, right? It's great stuff. It's a brilliant idea. Like once you've worn these things, like listen, I'm LDS, right? So like I can't wear these things, right? I have a pair for like when I'm doing weightlifting, because the weightlifting singlet, it's not 100% block, it's not 100% opaque or whatever it is that you call it. So you got to wear something underneath in case it's, you're in the lighting and it's see-through. So I got these things. Once you've worn them, you won't want to wear anything else, okay? It's the greatest. And yeah, it helps more air get up there. They're great. They're great. Like, man, no. It doesn't go up your butt crack. I don't understand how somebody wears something that goes up their butt crack. That would just wouldn't be able to stop thinking about it. It would be uncomfortable. Supporters. No, that's whatever. Outdoor viewfinder. Wait, what? That's thermoregulating. That's not what you want. You don't want thermal regulating. Moisture wicking fabric. Yes, there you go. Quick dry mesh. Yeah. Was the reason why the CPI move bigger than the PPI because CPI is more significant move, or just that participants were shocked more on CPI? That's a good question. And I would say that more generally speaking, CPI is usually more important than PPI. The thing that the main problem that the Federal Reserve is there to like protect or fight against is the wage price inflation cycle, whatever we call it. There's a better word for it, and I've used it in the past date, but I can't remember the correct word. You don't want a wage price spiral out of control. So what consumers are paying is the thing that really matters. PPI matters because presumably you'll see some of that inflation carried over to consumers, right? But the consumer price inflation is the one that like the Federal Reserve really has to worry about. So generally speaking, CPI is going to be more important, and that is unless like PPI really surprises. Okay. Through the second half of this year, I continue to expect positive employment reports. GDP number is likely currently misleading. I agree. The problem with the GDP number right now is that US exports are just like totally shot because of the strength of the dollar, but it doesn't necessarily reflect the underlying economic activity in the US. And since exports is such a significant portion of GDP, that being in the pits basically means that we get negative GDP, even though we're not necessarily seeing like recession sort of stuff. Who would call me at this time? Hold on. So normally I wouldn't answer a phone, early in the stream or whatever, but it was a New York number, I think. Wait, what is the area code for, what was it? It was 610, I think. 646. Yeah, that's a New York number. 646. But it was a recruiting person. It was like somebody looking for, trying to convince you to take a job somewhere. So he probably doesn't realize how early it is for me, right? Most people probably would still be asleep. I mean, it's kind of looking like we could go short again, but I think that we just kind of took our licks, and I don't know if I really want to make another. Well, I should keep out. But we're gonna have stuff is coming still, right? So let's watch here. I don't think recession models are particularly accurate. I mean, Fed forecasts don't exactly have a sterling track record either. Yeah. So PPI is a leading indicator of CPI. I'm not sure about that. Theoretically it should be, but I've never noticed the PPI to be particularly predictive of what next month's CPI will be, right? But I mean, Bullard is saying like mildly hawkish things. He hasn't said anything about if he wants to. Has he? Did I forget? Because I don't remember if I saw the number already. The question is if he says anything about should we raise 75 basis points or 100 basis points. The bonds are behaving like NQ nowadays anyways. Well, this amount of volatility is what I remember when I first started trading, at least for news. The market that I remember was like one day you'd barely be able to get 4 ticks in the 10-year, and then you'd have like news and most news events would be like this. There was a time period there before the pandemic, though, where it kind of felt like you just could never get anything to move consistently, and it was just really frustrating all around. I have been doing pretty good with the micro treasury futures since they opened up, but I'm pretty sure that a large part of that is due to the high amount of volatility that we've had, right? So was it like a 4 tick? Oh yes, all the time. You would have like a day, at least one day during the week where we would sit here. I mean, there's probably a dozen or so videos on here if you go back in the streams where you watch it and it moves 8 ticks for the whole stream. That's happened. They just chop around that 8 tick range, and it's just a disaster for anybody that tries to trade it. It's like, because Jacob, he was asking me on Discord last night about that sort of thing. That was like, well, if it's a range, does that mean you want to use limit orders and fade the breakouts? And it's like, well, theoretically, yes. Every time that I watch that kind of action, it seems to me like that's what happens. But then when I start trading it, it turns to shit. It's like, it doesn't matter what you do, you always lose. They watch what you do. They watch what I do, what you do. I mean, I'm sure that they look at the aggregate of the orders to determine which way to do. But like, to me, it feels like they watch Seth's stream, they find out which way Seth is going, and then they push it the opposite way. You can't win in that situation, right? So it's kind of like, in those situations, probably not worth even bothering. So let's do, if we get to here, stop limit. Whoa. Fed's bullard based on inflation data. Fed should target 3.75% by the end of 2022 by Ernst FX Street. That's something different. I don't think that Bullard said that per se. Wait, am I understanding this wrong? I think the most recent inflation report means the Fed should now target 3.75% policy rate by the end of 2020. That's a... okay, well, it filled anyways. We're good. We're good. I'll take more if they go back up. Seemed like you were the only one trading it. Well, I mean, there could be some... Listen, in the 5-year, there often are situations where I'm the only one trading it. And yeah, it did feel like there were some times where I was the only one trading it. I mean, I think that we're going into a time period, the retail traders are a little bit slow on these sorts of things, but we're getting into a place where, bond trading could become more popular just because there's so much volatility around it. And then micro treasuries on top of that really help. When I started trading the treasuries, nobody wanted to do it because it just sucked. The volatility in the bonds was just absolutely dismal. So what's the mortgage rate going to be then? Probably 4.25, something like that. But again, so how can you target 3.75% policy rate by the end of 2022 and the 10-year is below 3%? That makes 0 sense, right? The market doesn't seem to think that the Fed will do that. The market seems to have this idea that as soon as they raise in September, that's going to be the end of it. Which I'm not like live action. I remember that grass move that you were there, live action. Man, you've been one of the, if not the most longest running dedicated viewers. You and Uzi. Uzi's still around, right? He's just been quiet. He hasn't been commentating as much. Who else? Uzi was really the first one that like really started chatting with me. And then live action. I think live action came after Uzi, but I can't completely recall. How is the dollar so strong in spite of the commotion? Good question. Kevin, you've been around for a while too. Not quite as long as Uzi. Well, actually, that might not be true. You may actually predate Uzi, but just there was a period where you weren't as active. I don't remember anymore. You know what, Kevin? It's been like 5 years. What we really need to do is we need to have the speculator Seth meetup is really what we got to do, because I think that it's just kind of a we've been chatting every day for 5 years. That seems like a good reason to get together, 5 years. It's been a long time. We've changed a lot in 5 years too, haven't we? Like really, it's kind of crazy to me that it's been 2 years like it's 2022. Pandemic has been going on for 2 years now is a little startling to me because I feel like I'm still in the heart of it. That was just yesterday. And take a trip to the CM. Yes. Yes. Actually, you know what I really want to do? Like a dream of mine is I want to go on a tour of the New York Stock Exchange. Like, can we do a tour of the New York Stock Exchange? Like, I haven't seen anybody do a tour of the New York Stock Exchange. It used to be that anybody could go in and there was like a visitor's deck where you could just watch and observe them and everything. But then there was the terrorist attacks and everything. And now the disruption to the stock exchange is too high of a risk and you can't do it. But you could still visit, right? You could still visit. Like, I'm sure they could still put something together for media. Oh, that'd be so cool to be able to take my camera in and tour the stock exchange, man. Nice way to put a name to a face. Well, that's the thing. I this is not something that many people realize, but I'm telling you, being a viewer is a way more interesting experience than being a creator. In many respects, being a creator sucks. I'm really into it right now. Like, I want to make videos. Like, I want to talk about something and tell the world my opinion about something. I want to sit here and try and say the funniest things that I can. Or I want to come here and figure out how good at storytelling I can become. Like, I find that challenging and fun and interesting. But content creation can be a real grind. And the thing that's so weird is that you have this audience, but to you, the creator, number one, there's like so many people. Like, I don't know 6,000 people. Your brain is capable of like maybe keeping track of 100, 200 people, right? If this stream was regularly pushing over 200 viewers, I would have to create like an inside circle or something. I would have to make it like, well, everybody can watch, but only paid subscribers can chat or something like that. Just because your brain can only handle like 100, 200 people at a time. And I think it would kill a big part of the stream, because a big part of the stream is that we have a personal connection with each other. Like, I know you guys and you're here with me every day, and I kind of have a general idea of what your individual opinions are and how you trade and things like that, right? And like you said, like Kevin doesn't come in and chat every day, but he has been watching for like 5 years, right? So you kind of get that thing, and I don't get to see your faces or anything like that, right? So to me, you're just a name, right? It's like I have a really close friendship with a bunch of names. You know, like my best friends are names that they come in and chat with me during my stream, right? It's kind of a weird, it's kind of a weird thing, but being a viewer is actually much more interesting in many respects, because now you get to have a relationship with the creator. You're chatting with them, you're having back and forth discourse, but you can see them, you can hear them, all of these things, right? And like, what is it that attracts a person to an individual creator? What is it other than that you want to trade treasuries? I mean, if you want to trade treasuries and you just like watching streams, then this is like the only game in town. I understand. Yeah. Seth is sometimes Seth is annoying, but like, he's my only choice. I get it. I understand why when there was, other people started to stream trading and they were doing e-mini trading, that some people would rather watch the other stream. Okay. I'm kind of a weird guy sometimes, especially today, because I didn't sleep very well. I'm probably a little bit more ADHD, and ADHD Seth is more fun. Okay. Adderall Seth is too serious. That's the reality of it. Adderall Seth, too serious, not very empathetic, just is a little mean. Okay. ADHD Seth, a little bit more fun. Okay, we're a little bit more fun today. I get it. But you know, I could watch any person on YouTube, okay? But there's certain people that I enjoy watching on YouTube. The one that I kind of decided to make like my boy, you know, like the person that I hope someday I meet, Harris. Harris, we live in Utah, man. You just come over. It'll be we can have fun. We'd love to babysit. I have a baby. Your baby is a little bit older than my baby. And then I have a baby that's older than your baby, right? We can have fun. Come over, my boy. I knew that he was in Utah and I decided I'm going to watch this channel and I'm going to like this channel. And like I don't think that we're like similar people per se or anything. Like he likes Max. Oh man. It would be really, really hard if he comes over and visits for me to not make disparaging comments about Max. This is just the way that I am, right? But why that one person? Well, because they were in Utah. But then it's like you like this creator. Like seeing Harris has become so incredibly successful. In some respects, I'm incredibly jealous of him because he's basically Fat Fire now, and he was smart about it too. Like he could have bought this big huge house and blown all of this money like some people do, but he basically kept investing in real estate and other things until he was basically like he didn't actually ever have to work. And so now he can just take whatever kinds of risks that he wants with the money that continues to come in. And I don't know if I'm how bullish I am on his next set of projects, how well they do. I'm sure that a bunch of those projects are going to like be dismal failures, and then maybe one of them will be wildly successful, just like his one project that was the stream beats ended up being wildly successful, right? But I was so pumped, so happy to see like when he really became successful. Like when I started showing him, that was when he like broke out and he was making enough that like he could live on the YouTube revenue sort of thing, right? When he broke out to the spot where I'm really trying to get to, where I'm making enough revenue coming in. Like listen, I love to do I was talking about this with somebody just yesterday. They're like, well, you got to be willing to upsell people and, you know, monetize things. Oh, I'm totally down to monetize things. And you know what? Because I know if I'm giving out something good, if it's something good and it helps people, in many respects, I am obligated to monetize it, because then that means more money and more resources that I can put in to make it even better, right? So I'm totally down to do all of that, but we're just not to this size yet where you could live off of it, right? But we want to get there. So that we can make even better content and help you even more. Like I would really like to have my book. I have a lot of these questions that you guys ask me. Like, okay, how important is the PPI compared to the CPI? Well, the CPI is consumer inflation, so it matters because that's what the consumers actually pay. The Federal Reserve pays more attention. That's the sort of stuff that I want to have in my book, right? And so it'd be great if that book was already out and you guys already knew those things. We could get into even more advanced questions, right? Things that I even know. No, not Charlie. Harris Heller. Harris Heller. The channel was called, what was it? The Alpha Gaming Channel. That's what it was called. And I think he kind of eventually they decided that was they didn't like that brand and they rebranded it to Senpai Gaming, which is still kind of like, but I'm not that into anime, but I digress. It's a good channel. It's a good channel for streamers. And it was showing it to me because streaming. I'm interested in streaming stuff, but he had like a breakout video, and that was the point where like he was making enough money from it that he could live off of it, or that he could pay somebody else to be a video editor, right? I would love to be able to pay somebody to be a video editor and tell them, go through the stream and cut out all of the best parts and turn them into TikToks and YouTube shorts, right? That would be really great to do. That would probably help. You're not a gouger? Thank you. Well, I just try. Like, here's the thing. It's really easy to create products and sell them online, okay? Like, there are tons of people on TikTok that have like these, you know, you buy my $20 PDF or whatever, and then when you look at the PDF, it's like anybody could have written this. Like, this is all just common sense stuff, dude. Why would anybody purchase this? Right? But so actually providing value is a difficult thing. I think that I provide value. I do. In fact, the problem I think that I have is that sometimes the value that I'm trying to provide, well, let me back up. Let me explain it this way. Let's see here. Fed's Waller backs a 75 basis point hike. China's economy slows and Wall Street will pay fines for using unauthorized messaging apps. Oh, yes. That story is... Ooh. Anyways, so I was watching another TikTok. So the kind of content that I'm finding the most interesting right now is around producing. I'm not producing music that much. I kind of have a problem. Like, if I get started on producing, I can just keep going and going and going and going. And one of the problems that I have is that I love to sit and change every dial and see what it is and what all the options are, and then decide which one that I have that is the best. And what I'm learning now is that actually, like, it's better to come in, like when you're mixing, listen to the thing, make like a gut decision about how you feel it should be modified, do that modification, and then move on. And you just want to work fast and just everything be instinctual, because the longer that you listen to it, the more that your perception of it is morphed by what you think it should sound like or something like that. So it's better to work fast. And this guy was saying, see, anytime that you become a consumer of your music, it kind of becomes a problem, because then you have this thing in your head about the way that it's supposed to sound that you can't really duplicate, and you may actually end up making the work worse by trying to chase that. And you're basically going around and making music for a market that doesn't exist yet and may never exist. Whereas if your music creation is intended to be consumed by a certain audience, and you know what that audience is and what they like and how to produce for that audience is, you know, that's not a problem, right? So I have that problem here with trading in YouTube, right? I am a consumer of my content. I'm not a consumer of like my economic analysis and what's going on with the news and things like that, right? I make that stuff all for you, and I'm doing pretty okay job at that, or at least I'm getting better at it. But like the programming and everything, those are like tools that I make for me, and then I've made them available to you so that we can like fund further development of them. But the problem that I run into is that what was made for me doesn't necessarily resonate or make sense to everybody else. So I have these indicators that are incredibly sophisticated and require a large amount of explanation, about how to use them and everything, because they're advanced concepts and it's hard to bring in much volume when in that, right? When it's something that most people are like, well, I don't even get what that is. Right? So if I want to, we might have a large enough audience that the right kind of monetization option could generate enough income for me to live off of to be able to transition to making content full time. I'm just not quite sure what the piece of content that I would that would be best for me to do that with would actually be. Like I was saying, I think something that I'm kind of thinking of doing right now is having a newsletter, like a weekly newsletter where I preview what the pieces of news are and how that matters to the current context of the economy, because that's one of the big pieces of value that I provide for you. And Sometimes I don't always go through as thoroughly as I should what the news for the week is going to be. And so, like, I might miss something. Right? But if I'm making a newsletter about it every week, that would be better, right? I would really like to do, I don't know if now is the time to do it still, but, a Sunday session. But I think if I do a Sunday session, I wouldn't necessarily want that to be a subscriber only thing. And I would like that to be more of like, you like a thing on Discord where we use what do they call it? What do they call that? You can like do a live stream on Discord, and then like people can be talking and you can like give them the mic and stuff, right? Like I think that would be fun to do on Sundays, but right now with the babies and everything, that's maybe not I should probably be paying attention to the babies on Sundays. Right now it's like hard to even work out with the babies. Because if I work out, that means, another 2 hours of my wife, doesn't get a break, which is hard right now while the one baby has to feed every 2 hours. Hello, Hydro. How are you doing? A little later today, but it's like a kind of an odd market today so far. I'm very curious as to whether we'll break new lows today or not. They did go down to those lows, but we visited both sides here. Babies are a handful, right? So like the other thing that's fun about the experience of being a viewer rather than a creator, like I'm telling you, being a viewer is actually more fun. Okay. Is you get to live vicariously through the other creator, right? Like to me, I don't like to talk about like, oh, I'm super successful. You should watch me because I'm super successful. Well, look, I haven't made millions of dollars from trading. And sometimes I make really bad decisions from trading, right? But, through my day job and everything else, I've done pretty well for myself. And, a lot of the decisions that I've been able to make, we were talking about this with my wife last night again, too. Well, not again. That was the first time I talked about that, brought that idea up to her. But she was like, oh, really? But then I went through it and I was like, would we have been as aggressive at trying to finish your house? Would we have been as aggressive at trying to move? Would I have already owned a home if I didn't have the background knowledge about the markets that I have? Probably not. Maybe we would still be in a house, but we probably wouldn't be in this house only because of what I know about markets, right? But I don't like to attract an audience based on past success. If it was any other discipline, maybe I would do it. But when it comes to trading, when you're doing that, you're just leading people down a logical fallacy, right? That past performance is indicative of future performance. So I'm never going to come in here and be like, oh, you should watch me because I'm so successful. Okay. But I mean, like, look, I have a pretty nice room here, guys. I have a pretty nice room here, guys. Do you agree with me? We bottomed now? I'm not, bottomed on the treasuries? I'm not sure I understand. Anyways, where was I going with that? Babies are a handful. Oh, yeah. I remember now. Okay. So like, look, I've done pretty well. And like, the thing is that if I end up doing better, like let's just say that tomorrow I get another job and I make 50% more. That's a possibility, by the way. I mean, there's people recruiting all the time. I haven't found a place that it was like more convenient than where I'm working right now. So I've stayed where I'm at, but I could probably get a pretty significant raise by moving if I found the right spot. Okay. I wouldn't have anything to do with that money. right? Like, when my wife starts working again, there'll be some extra income in. Not 100% sure what we do with it. Although maybe by that point, inflation will be enough that, we'll just be break even again. We'll be where we were before. Okay. So like to me, like the money aspect of hitting it big or getting bigger, not doesn't really do much for me. Right. But the fact of being successful and like the experience of going through that and having a large change in your life, that's cool stuff. I'm all about the novelty. I'm ADHD, so that sort of stuff, you know really gets me going. But here's the thing, I don't actually have to experience that particular thing because I can live vicariously through other people. Harris, he got a new house. There's all the nice things about his house. And then I can go, oh, yeah, I remember when I made my house and all of the things that I did about in my house and the mistakes that I made and the things that I did well. I, um, that's fun. And like one of the things that's funny with Harris is like he has a kid. His kid doesn't walk yet. And I can remember when I had the kid, when the kid started walking. Harris, I know there's been problems. You've been getting content out. You want to get as much content out before that thing starts walking. You want to get as much content out before the babies start walking, because once the baby starts walking, your life is over. Everything changes. Your baby might not be as bad as mine is. Mine has been absolutely terrible. You cannot leave anything out. All your life is a constant struggle of cleaning up what that baby just did and making sure that they don't kill themselves. There's that game you can get on Steam where like one player is the parent and one player is the baby. And the baby's objective is to try and kill themselves. So if the baby kills themselves, then the baby wins. And the parent is supposed to keep the baby alive for the 5 minutes or whatever. This is the way that it actually works. That's real life stuff. Okay. That's how things really actually are. Once they start walking, man. I'm still not sure. Bottomed on risk assets. Oh, I'm not sure. Okay. Okay, so what Bullard is saying right now is that to him it doesn't make much difference if they do 75 or 100 basis points. That's kind of an odd comment to come from a Fed speaker. I think I'm going to take 2 contracts off. Wait, did I just take a contract off? I'm confused. 1, 2. Not all in. I never really got out. I was never all the way in. I still have some cash that I probably need to deploy at some point. But you just average it in. Yeah, I'm not 100% convinced that risk assets have bottomed or not. Just because I can't see 6 months into the future, right? There's one of these scenarios that it seems like there's a significant number of people, a significant number of people come here, or what am I saying? Oh, I just read what Hydro posted there. It was like, well, I'm not flexing. There was a point to it. Look, right? That was the whole thing, is that I don't go around and say like, oh, I'm super successful because I make, that's why you should follow me because I have all this money. Like, to me, that doesn't matter, right? The reason you should follow me is because the value that we're actually providing, you can see that it's valuable. I digress. there's a lot of people making this bet that the economy is going to go into recession. You go and you read Zero Hedge every day. It's basically like the Federal Reserve is tightening into a recession and they're going to have to stop raising rates after September. And then they're almost immediately going to start up QE again. That's what they're saying. That's what they're saying. And some people are taking this trade that going long stocks because they think that that's about to happen. Like that's a thing that's happening. But like, I see a scenario where 6 months from now, inflation continues to be a persistent problem and we continue to raise interest rates and it continues to have a problem with the S&P 500. I also see that most of the analyst estimates are still lower. Most of the analyst estimates are still at like 3,400. So I'm not confident on making any kind of a prognostication about whether we'll be higher or lower in 6 months. There's too much economic uncertainty. I'm concerned when I see people that seem so confident that they know that, because from where I'm sitting, it seems to me that even the best and brightest economic minds in the country don't actually know. Like the greatest economic minds in the country are basically saying that at this current time, we can't predict that. So why should I be trying to predict it, right? Just saying. Just saying. That drives traffic here as a tip to get more people to your show. I think that, if we really want more people on the stream, one thing that would help might be broaden the audience a little bit, right? Sometimes I'm too serious, etc. We talk mostly about bonds. Maybe people want to talk about stocks, that sort of a thing, right? But oh no, those aren't stops. Those are limit orders. Yeah, limit orders that obviously aren't ever going to get filled now. But I think that what is going on is that we're relying primarily on discovery for the viewers, and the viewers that already exist, or that came in from you watched a video and said, oh, he does a stream, I'm going to go and watch that, sort of a thing. I think that if we really want to grow the stream on that point, that we need to do like kind of more of a social media blitz sort of a thing, like we'd have to get people interested in watching the stream because they just saw it, we tweeted about it, sort of a thing. Except for that I don't really have a following on Twitter. So how do you build a following on Twitter? I don't know how to do it. I don't know where to go, but I think that if we were going to make the stream larger, that's where it come from. Yeah, I have a sim trade short. I took some size off. I'm interested in maybe being short 5 contracts for a break lower. Actually, we could do it right here. So we could add right there. If they come all the way back out through here, I guess I could probably cancel these because I'm not so sure that it's going to come back to those. If it comes back to those, we might be in a different situation. But I had those out there because I was feeling pretty confident and I wanted to try and build some more out of that range. But you can see like they never gave me another opportunity for it. So, but I don't already. Well, I'm up now, but. Right, because it took $500 loss on the earlier one not working out the way that I wanted. So, well, in 10 minutes, we get the consumer confidence numbers, right? Or what is it? See, member Buller's box. University of Michigan Consumer Sentiment. In inflation expectations. Inflation expectations being a individual number that the Federal Reserve members will pay particular attention to. So let's remember, okay? Consumer sentiment is often a pretty large number. It's one of the larger numbers that gets released at 10 o'clock at least. But in this situation, it's going to be particularly market moving because apparently the consumer sentiment and inflation expectation numbers was the thing that pushed the Federal Reserve from a 50 basis point hike to a 75 basis point hike last time. So if that number comes out and it's bad again, then look out below, right? Look out below. So let's see here. The inflation expectations right now. Oh, so recently it's been at 5.4 and it's just been staying up there. So 5.4 or above would probably be bad for the market. S&P risk assets would sell off, treasuries would sell off. It's kind of fun to think about. I'm a little more relaxed because I'm between accounts, right? I think that it will be Monday before I'll be able to use my Rhythmic account. Next inflation read is going to be lower. I'm not sure I agree. So I made a TikTok about this, but consider this. Everybody's saying, well, the next inflation print will be lower because the commodity prices have come down. Well, sure, the headline inflation print probably maybe got to realize that those commodity prices could smash right back up to their highs by the end of next week if they wanted to. Okay, but what are the things that are driving the core inflation right now? Housing is probably the biggest one, and because of the way that that's calculated, that's very unlikely to change next month. And medical services and medical on that one, if anything, pressure on the on the medical system rather is the risks are to it getting worse. The risks on it are likely to get worse. So I think that there's a pretty good chance that next month that at least the core inflation number will still be somewhat elevated. I'm not sure if it'd be less than this past month, right? But even if it's less, it will still be somewhat elevated, right? Why do they base their decision on consumer sentiment? So it's part of the survey is the inflation expectations. So inflation expectations is the thing that, you know, the Federal Reserve, the whole point of the Federal Reserve is basically to prevent inflation expectations from getting out of control. When consumer inflation expectations are high, that's when they demand a raise, and then they get a raise, and then they start paying more money for food, and then they raise all of the food prices, and that's how you get the wage price spiral, right? So when inflation expectations are starting to get out of hand, that's when the Federal Reserve has to act more forcefully. And that's why it was so pivotal last meeting. And if it ends up being 5.4 or above, it could be a problem for this market as well. Based on what exactly? Well, so if we're talking about, if I think that I was talking about the medical stuff on that one, but you know, there's another COVID wave and there's monkeypox and things like that. So, and there's still supply disruption from China. So the medical supplies could still be high next month. So I'm just saying the things that really drove this last report to be so high are not likely to go down next report. Not as likely to go down, right? So you might see a situation where the headline inflation is a lot better, but not the core. Food and energy, from what we're seeing in the commodities right now, food and energy are going to come down, but definitely not housing, unless like we go into a recession between now and September. You know, unless next retail sales is like negative, essentially. 5 minutes. Market ranging pretty good here. 10-year having a hard time touching 16. Kind of funny because it's always something weird happening at 16. I went long bananas just as monkeypox. This whole thing about how they used to have different bananas is the most interesting thing to me. I'm kind of like, oh, I want to have an original banana. Y'all say that they were better. And what happens if the bananas that we have right now, those ones go too? That's a possibility, right? That would be bad. My son loves bananas, okay? Agriculture is an interesting thing. There's so many different types of apples and they all originated from the same apple? What? Yeah. I feel like I need to be paying for this stuff. I am broke now, but we'll pay. Oh, well, thank you very much, NASDAQ killer. Well, we were just saying we should be putting this stuff in a newsletter and putting it out on Sunday, right? At the very least, for my own sake, because what will happen is I won't necessarily go through and do the analysis and remember it. But if I go and I make content about it, I definitely will. And that would be make me better for you guys here on stream. And then for paid subscribers would be able to, I don't know, how much would you guys pay for a weekly newsletter? We could do like I'm thinking $10. Still keep it something reasonable. I don't know. One of the things that I hate is that I will set something up, you know, like the Bitcoin thing. Like I still post stuff to, I probably need to make a post today, but I still post stuff to the Bitcoin Patreon, right? But I don't actively promote it. Like I basically like completely forget about that. And I do that with things all the time. Like I just have a really poor how do you say, attention span. Yep. You want to invest 10? No. I don't want to invest any money in Bitcoin. I don't want to give them any more money. Okay. What's Fed's Bullard saying here about the yield curve? I believe the yield curve is different this time. He takes yield curve inversion seriously as a signal. This time is different on the yield curve. I'm not sure. I see what he's talking about, or understand what he's talking about, but no, I don't. I don't want to contribute to the problem. It's not like I don't think that I could put money in Bitcoin and make money off of it. It's that if I go in and I make money off of it, I would be contributing to the problem. You are the problem, you'll realize, and I'm not. I'm not the one out there creating Ponzi schemes, and no, I'm not going to be involved in that. Government comes in, regulates it, decimates the industry, maybe then I'd be interested in touching it again. Stable coins get regulated, maybe then I'd be interested in touching it. Oh, we still got 15 seconds. Okay, here we go. I thought something happened there because there was a little jump. How bad do you think this is going to be? Well, if it goes up this way, I want to, oh, well, they went down. Looks, oh, yep, nope, okay, I stopped out. No, I didn't finish. Flat, just panic button, okay. Okay, so it was down 5 spot 2 versus 5 spot 3. So did you see, man, it did not take much. So inflation expectations decreasing even a tenth is really, really good for the market. Okay. Let's see. I think that this could continue up, but it might have just done a spike and then it'd be done and screw everybody over. I did not get the other numbers there. What's with that? Oh, sentiment was 51 versus 49. Conditions 57 versus 52. So that is a lot more optimistic. Overall, I would say for the S&P 500 bullish report. And somebody probably puked really hard there. Because it jumped up there. So, I mean, it was all the way down there. And it came up here to 119 almost instantly. Like, I really should have just... Oh, wait, why would I do... Okay, whatever. Really should have just hit the panic button. Well, if it was a live trade, I wouldn't have been in it going into that piece of news, but... Having too much fun today, I see. But like, look, we've been across this range now 1, 2, 3, 4 times. How often does that happen in the treasuries that you break a new high and low 5 times? Do you think I'll go stop hunting? No, somebody definitely puked there. There was about 10,000 contracts long on that move. So somebody probably hit panic buy, or like, somebody puked. There was at least one large player puked on that move, or well, I guess it'd be a combination of pukes and speculators like ourselves just trying to get in on it. But like, you can see how much expectations there was built around that, huh? So does slightly better inflation expectations reduce the chances of a 1% rate hike? Well, given that the Fed speakers that we've seen so far are already kind of saying that they still favor a 75 basis point hike, I think that would say that only makes it more likely that it'd be a 75 basis point hike. The retail sales maybe increase the chances of it being a 1% hike, but we get some news next week, right? What was the events next week that mattered? Oh yes, housing data. Housing data is going to matter too. We should expect to see a decline in housing. Last was 1.7. I think that it could probably be even less than that. Maybe 1.65. Market is predicting 1.69. Right. If that number were to come out to be above 1.7 in housing for building permits, housing starts, etc., existing home sales is 5.4. Any of those are higher than the expectation, it would be disastrous for the market. I like the initial move, but they sold it up top. Well, it was just the liquidity hole, coming back from the liquidity hole, right? Look at the volume when it traded, right? Most of these prices were only like a few dozen contracts on the way up and a few dozen contracts on the way down. Not most, but at many of these prices, it was like that. Oh, of course, you have the big old order set right on top of where I got in at. Take him. Take him. Guess not. This might not be a good trade. I don't like seeing that big offer sitting right above me. That's the exact opposite of what I'd like. Of course, they could hit through it. We could be game on, but at the very least, it says that the entry that I took was not very optimal. Not very optimal. And then you evade and stop them. I don't want to be the one fading this kind of a move, right? It's really hard to hold a set amount of risk off in that kind of a situation, right? It seems to be having more mean reverting behavior today than usual, right? So we had a piece of news that was, I would say, unusually negative for the treasuries. They retraced that. Now we have a piece of news that I would say is unusually positive for the treasuries, or at least would cause buying in the treasuries, and that's mostly retraced as well. Well, Dixie is long. Well, they did take a little bit of a hit there, down from 108 to 107.7. The 650 shouldn't be a problem. 770 shouldn't be a problem. But you can see they're shying away from it. The dollar moving higher. I saw a thing the other day. Somebody had bought leaps on the dollar index when it started turning around earlier this year or whatever. I was like, that's got to be an insane trade. Like that's like a 50 bagger. Would you say that when the news is confusing, they just hold a range? I think that when the news is confusing, that the volatility is likely to persist longer. Is the empirical behavior that we know of. Especially if it's like we're not sure if what had happened there was news or something else, then that can really extend how long it takes for the volatility to settle back down. I wouldn't say that this news is confusing. The thing that's kind of interesting about it is that it's mildly positive consumer sentiment. Consumer sentiment has been going wrong for so long that, even a mildly positive one just seems like a really big ray of hope. Right? It's kind of silly to me where we're talking about a 1/10 or 2/10 on the inflation expectations being that big of a deal. But I think in this situation, it's justified just because the amount of orders that we could potentially see off of that, right? Now, the question that we have to answer ourselves, though, for a trade and for this trade is, we saw 10,000 contracts go long or so. How many more might we see? It is Friday after all. And this is one that I've always had a very, very difficult time sorting out. I think that there will be more, but at the moment, the action that I'm seeing kind of suggests maybe not. At the very least, they've paused here, right? But I'm kind of seeing some concerning signs that they did their move and the guys that made money got out and now they're going to go home early. It's strange to me how they base their judgment on consumers and consider the Federal Reserve stupid, let alone. But no, I don't think you understand, right? It's consumer. Yeah, never mind. I don't know if I can explain it any better than I already have. The book is still way too thin. That's for sure. The book is pretty broken right now. Like I said, somebody had to have puked on that. Like that was not just like a piece of news that like, okay, let me explain it this way. Put the chart up over here. Okay, there was action here that we've seen this morning really big. Okay, so here you can see the move that we had this morning. This was a top level piece of news. One of the most significant economic releases we get all month. Like really, besides non-farms and inflation expectations, I think the retail sales is the next largest one after all of that. Big move, then they retraced it. But look at how long it took to play out, right? The move down took at least 5 minutes, and the move up happened over, 6 or 7 minutes, right? Then here we have this release. Not quite as significant of an event. Liquidity a little light on it, though. It made a move bigger than this and came all the way back all within the space of 1 minute. This thing right here. That's a little crazy. Do you think that everyone is, well, people in general have certain kinds of biases that are kind of funny, right? The thing that I think is funny that I think would be equivalent to saying people are so dumb is that you have the people that study the economics and monetary policy their whole lives and are basically considered by our government to be the top experts on the matter, are not sure what's going to happen. And yet every person out there seems to think that they know better than the Federal Reserve what the appropriate monetary policy is. I mean, I understand why it is that way, because everybody is affected by what the interest rates are, positively or negatively. Some people benefit when interest rates are high, some people benefit when interest rates are low. So when you have something that affects you so much, everybody's going to have an opinion. But it's so crazy to me how arrogant everybody is that they know better than the Federal Reserve what the correct policy should be. Especially when you have to consider that, like, everybody's watching what the Federal Reserve is doing. And so, like, in some respects, they're kind of trading against the Federal Reserve. So it may be the case that no matter what the Federal Reserve does, there's going to be some problems with, them being wrong about things simply because of like the way the markets work, right? I, at least at this time, do not seem to be so burdened with such delusions. I can point out a lot of things that we know, but I know that I'm not really able to accurately predict what things are going to be like in 6 months right now. There are some situations where I knew and I was right and I was confident about it. And I'm not confident about it right now at all. No way. I don't see how anybody could be. Well, this impulsive sim trade that I tried to take after that news is not going so well, is it? Probably by the time I cancel it, it's just going to flip back up the other way then, but I'm kind of sitting here like, well, it's not really worth paying attention to, but does that mean exit out of it, or does that mean just ignore it and hope it comes back up? I think I'm just going to ignore it and hope it comes back up. You're right. You don't see it because you think other people don't have something to teach you. By and large, other people do not have something to teach me. It's absolutely true. I know that there is other information out there, right? And I know that there is a very wide body of information that I don't have. But the vast majority of the information that retail traders come to me with is nonsense or junk or things that I already know. Right. So like in this particular situation, you don't necessarily know anything more about the economic data than I do, right? We've all seen the same numbers. You're just coming to a slightly different conclusion. I mean, I guess the conclusion that I'm saying is that I don't think we have enough information to say. And you seem to be convinced that the data is such that we could be near a bottom in equities, right? I don't think that the data is clear enough to say that, right? So can I come in and say, well, he's not telling me something that I don't know, is what I'm saying. But I think that the difference between you and me in this situation is I am much more cautious about going out on a limb and making a call like that. I really need to see really strong evidence to suggest that that's the way that it's going to go. Right? I'm not as big of a risk taker in that respect. I'm a little concerned that the big order, not that it's a huge order or anything, but it did move down and now it's at 22. Seems like to me like somebody's, well, there is one at 19.5 now too, but it seems to me like the market makers are kind of trying to lean on it now. Okay, so I was going through my tabs and, just seeing, which ones do we need to kill? And there was the conversation earlier about, why aren't there camels in Utah? Apparently there was at one point. So I can read the story about that later. But apparently there were camels at one point. Holy crap, News Squawk, turn your volume down. Why are you assuming your thinking process? What was it about that was an assumption of your thinking process? I'm merely saying you've looked at the same economic data that I have. You haven't pointed out any pieces of information that I didn't have. you're coming to a different conclusion, and the difference between your conclusion and my conclusion is that your conclusion assumes more risk, right? Because my conclusion doesn't take on any risk. My conclusion says we can't know right now. My conclusion is that the market data is contradictory and not very reliable right now because it is still disrupted. You seem, but it is taking a high. Well, it is the very act of taking a position on where the economy is going in the future is taking on more risk than I am willing to take on that subject, right? Because what I'm saying is, because of the way that the data is going right now, it puts us in a period of unusually high uncertainty. So if my ability to know what's going to happen is less, why should I make a call on which way it's going to go? Right? That, in other words, I'm taking on less risk. You think that you know which way it's going to go. The data is very clear. Mm-hmm. So how do you sort out? We just had last week, all of these reports were like really bad, right? And we got GDP is negative. Like GDP is negative. We might actually be in a recession right now. The manufacturing numbers, the PMIs are all looking pretty bad, right? But then retail sales is good. Employment hasn't been affected too much. Consumer sentiment is actually improving, right? It's contradictory. And you're getting some of those reports will be, really good. Like the retail sales was like, it was really bad in May, and then it was kind of okay in June. Like some of these reports are flip-flopping between positive and negative every month. So how can you even be sure that the data that they're giving you is even valid at that point, right? Or is really actually telling you anything? It could just all be noise. Just because our understanding of the economic condition is so, it's such an unusual time. Our understanding on it is very low compared to what we usually know. In other words, in 2008, this was a situation that, while in many respects was unprecedented, we had many similar circumstances to compare against, and the policymakers knew exactly what to do, and they executed on it, and they were quite successful with it. Whereas on the pandemic, this was a situation that we were not very well versed in, and the central bankers weren't really sure at all what they should be doing, and they fumbled it in many key important points, right? But dude, the chart has a shitting star. You look at data releases and don't create your own live data. Well, I don't. Well, so first of all, again, I'm really skeptical about how much informational content there really actually is in live prices on things, right? But I take it more of an analyst approach. I'm going to look at the individual reports and the pieces of information that we have that are predictive of that report, right? And to see what they come out as. If there was some other piece of information out there that was like more important, then like, why wouldn't we be watching that, right? But we watch these economic indicators because that's like some of the best information that we get. Where is your edge of view annual? Well, but it is current information we're talking about here, isn't right? That's a piece of information that just hit the mark. Well, I guess guess some of it is like again an aggregate of the past month, right? But I mean, if you think that you have a set of a set of data series that you're watching that you think is predictive of what the next non-farms jobs report is going to be, I'm calling BS. Right? Like nobody's able to predict that report very well, for instance. If CPI can be calculated live, then how come all of the analysts keep getting it wrong over and over again? Sounds to me like JP Morgan should go and pay you $1 million and steal your model. That's quite a large claim, right? You realize, because there's no single analyst that has been able to accurately call this thing. Maybe they should. It's this same thing, man. It's not that I think that people in general are stupid. There's a lot of really smart people out there. I'm just saying that regardless of how smart you are, there are people that all they do, seriously, guys, seriously, Hydro, you have to consider this, okay? There are people at Goldman Sachs, old friends of mine, for the 5 or so years that they're allowed to be in Goldman Investment Research. Literally all they do is run models and try to predict what these economic numbers are going to be and what the prices of individual commodities and stocks are going to be. That's literally all they do. And they have this whole support and this infrastructure. Okay. So you're talking about people that are making like $120,000, $150,000 a year. And you're talking about like 20 of them. Okay. So you're talking about like $2 million a year just in personnel costs. Okay. Just to predict this one number. And that is all they do and think about. Like, you're only allowed to do it for 5 years because it is that draining on your life. You're going to stay at the office late. It's really stressful. You have lots of deadlines to meet to get the reports out on time. And so they only allow you to do it for 5 years. Okay. So like they're spending all their time focused on this. And then here we have Hydro, some random guy on the internet that is able to beat all of that in his spare time. Come on. It has nothing to do with people are stupid. It's that we as people aren't really very good at knowing what we know and what we don't. We always overestimate our ability until you really get good. The thing that separates that I think one of the things that starts to get you into the great trader territory is realizing how very little you actually know and how very little even the best people at this actually can know, because there's just so much randomness in it anyways, right? No way. You made most of your income. The income that you've made has mostly been from cryptocurrencies though, right? From what I recall. And I don't know how long you've been doing that, but even if it was your full-time job, you're talking about like teams of hired employees versus one guy, right? Like you're trying to convince me that some random guy on my stream is the smartest economist in the world, is basically what you're claiming. Or is the most informed and accurate economist in the world. Maybe you don't do all of the work yourself, that for sure. For sure. Oh my. Well, I don't think that question was directed towards me, but I'm kind of like, I don't actually know how much I've lost this year. Just on futures, that is. I think if I just do this year, I'm actually probably pretty close to break even. $72. Down $72 on the year. See this whole thing right here, man. Here's where I screwed up. Well, I made 3 screw ups. This shouldn't have happened. This shouldn't have happened. I don't remember what those were. You know what? It's so weird how when we make big mistakes, you would think that those would be the things that you would remember the most. And I hope that I remember the lessons from those, but like we have a tendency to forget them. But this right here, this pisses me off, man. This should have been, I should have made $2,000 in here, and I didn't. For reasons, but it's really frustrating to me. You know, I was like, I wasn't feeling good that day, that sort of thing. Didn't take them, but I could have swung this and made almost $2,000, right? Oh well. But overall, we're doing pretty good, and this run right here is not too bad, not too shabby. And this run right here was really good too. I don't know what was happening with me on that move, but mistakes were made. There's a left tail, right? My results are kind of like this. Right? There's this far left tail. There should be a far right tail that's like this, but I missed it. But this, we need to eliminate this. We need to make this go away. We need to stop doing that. He's averaging 3.39% per month. Nah, I'm still calling bullshit. Without cryptocurrencies? Well, listen, even if you could even include cryptocurrencies this year. If you're making 30% per year, that's like the best in the world, right? It's okay, you will do it next time. I hope so. The problem is might not get as clear of an opportunity as that for a long time. Right? That one was a once in a lifetime trade that I missed. Ugh. I knew it. I mean, the thing was I tried to trade it, right? I did try to trade it in December and I screwed it up. It was too early. Well, we might, because you guys have the opportunity to take advantage of it too. You're still gonna be here too, guys. You ain't going nowhere. I know, because that's the way it's been. Oh, was it really only 30%? So if I come in here and I look at my average MFE versus my average MAE, oops, what happened there? Why did it do that? I hate it when it does that. That's a real problem in my stats. So like I am getting about 2 ticks more favorable excursion than adverse excursion, but I'm not getting the profit off of it. And my win rate is way too low. I think the reason why the win rate is so low is because on those days where it went really bad, I took a lot more trades. So the first thing that I can probably do to improve this is to not take as many trades and to understand the days where I'm just not doing very well and it's not worth trying to trade it, right? I think I'm doing okay. It looks like I'm doing okay here on, like, I'm holding my winners longer and everything and trying to let them ride. I'm maybe not getting, like, what was my largest winning trade? It was $85. Really? I caught an $85 winner? I don't remember that one. Largest loser was 65, but that was like yesterday, right? Oh, no, that wasn't yesterday. I don't know when that one was. That one shouldn't have happened. On the 10-year, I shouldn't be letting it be 65. So that was one of those two mistakes, right? Anyways, kind of interesting, but we still have serious problems to work out, I think, here. That's not very good. I'm glad that it's mostly short trades. That's good. Which one was made more? Huh. They made money on the longs and lost money on the shorts. That's interesting. That's interesting. But that's just this year. It's not so bad. I've had other losses in other instruments that were experiments. I should probably just stop doing the experiments and just do the one thing that I know how to do well, right? I really want to learn how to do spreads, though. At some point, I'm going to have to learn how to, I'm going to have had a lot of research and be like way more serious about it when we get into spreads, right? I think that part of the problem was with some of these experiments, maybe I don't take them as seriously. Oh, Jim Eurio. If you've thought about canceling student debt for more than 8 seconds and having concluded that it's an asinine policy, you may need some economic refresher courses. Yeah. And some psychology courses too. I don't. That's the one about that one that drives me crazy is the people that advocate it don't understand how destructive to the social fabric such a policy would be. They don't even know, guys. Well, this 112.040 in the 5-year has kind of been a ceiling on us. There's a possibility that we could see a breakout here from it. It kind of looks like we're going that direction, but yeah, but Binance is dumb and calculates profits in a stupid way. Like here's the thing on that is like if you've made money this year, and it truly ends up being 30%. I mean, look, we're halfway through the year, so we give it another 6 months, right? First we have to look at a full year's worth of data. But if you did that in the crypto sphere, with the way that things are going, there can be a lot of timing luck involved in that, right? Like, I really hope that you're not developing that amount of arrogance based on only 1 or 2 years worth of trading. Okay, like if you can pull out 30% a year, over 5 years, then you're besting the top hedge funds, right? I don't believe you. Don't believe you. Extravagant claims require or is it extravagant claims? Yeah, significant claims require significant evidence. And if you're doing 3.5%, right, that you're talking about like making 35, almost 40% a year. That's not realistic performance. And over 5 years, no, you should be getting awards. Years, or you're lying to me, or you're lying to yourself. Hydro is trying to flex gains, yes. Nah, none of us have seen his results. I don't think this is the first time that I've been like, I don't believe you. Yeah, well, plenty of people made lots of money in 2021 off of luck, but that's why I'm like, okay, but what's your 5-year? What's your 5-year Sharpe ratio? Actually, okay, so I learned something really cool. Is somebody has something called a what did he call it? A percentage adjusted Sharpe ratio. But essentially what it did was it was a Sharpe ratio that had built into it an adjustment for the amount of kurtosis and so forth in your strategy. And I was like, oh man, so that really would be if I was like trying to optimize a strategy, right? If I optimize just on Sharpe ratio, it has a tendency to go for these high kurtosis strategy sorts of things. So if I can optimize with this other guy's performance metric, that sounds like a way better way to do it. So that's another thing on my list to look into. It's like, I think that you can create your own performance metrics in NinjaTrader, right? Yes, you do. It's not a negative. No, it's not a negative Nelly, Hydro. It's that I'm not gullible. Come on. Seriously, like, so here again, here's why I don't believe you. Okay, this like I can go just off of this. Okay, anybody that was performing at that level would not be dumb enough to think that they could go on some random nobody's stream and claim to be basically the one of the most successful traders in the world and get anything other than derision from it. Okay? That's not something that a top trader does. That's something that a 15-year-old kid that's trying to impress people and is lying to people, that's the sort of thing a 15-year-old kid does. Top trader keeps it to himself, isn't gonna, if he's gonna be like, oh well, I know some things and I really like you, so I'm gonna help you out, and here are my results first, and you're gonna do it in a private message, and that's the way that a top trader does. And how do I know that? Because I've had top traders show me that stuff, like the way that they go about it, right? But they don't come in and be like, oh well, my economic projections are better than all of the analysts, and last time this came up, I was kind of like, well, I don't believe you, but whatever. But this time you're kind of saying, well, the reason that I know that we're hitting a bottom in equities is because I'm this amazing analyst. Okay. So now you are citing your expertise essentially as evidence in an argument, right? So if you're going to do that, then you would have to show us results, and it would have to be 5 years, and we would be going through like all of the trades, and we would be finding what your risk adjusted Sharpe ratios are, right? Or we would be looking at your risk adjusted performance. Well, he's not. It is a legal liability to make claims, but he's not a creator here, so he's just a guy in chat, so he's probably fine on that respect. But I digress. You wouldn't expect anybody to believe a thing that you say without providing evidence now at this point, right? Now you're just a crazy crypto guy that, you know, how far is he going to go before Seth gets fed up with him? See that offer that shows up again at 23.5? It's like he's trying to push it away from me. They don't want it to go higher. It's so the thing that I find kind of interesting about this action is that I would expect it to be doing the opposite. Like, okay, so on one hand, I kind of see how the way that things have turned out today could result in a good strong uptrend. Maybe what's happened is we got the maximum amount of long that we can get out of it right now, and the traders are done with it, right? But if that's what's going on, I would expect that there would be like some people that are long and really holding it from going down at all, right? Well, look, there was maybe a bit of a breakout. Client, well, that's like that. There again is I'm for cryptocurrency profits. I'm wouldn't hold those to be as significant either, right? You'd have to post it in Discord or you remove the periods from the URLs, right? You'd have to remove the periods from the URLs or it won't show it to us. It should be, well, not really, Cyril X. Like, if he was going to show us 5 years worth of risk adjusted returns to the level that we would want to do to be able to do an analysis of it and one, determine that he would be worth listening to, but then two, determining if the strategies that he was using were appropriate for us, it's really is quite difficult to, because you're basically saying, because I'm basically saying you need to pull together 5 years worth of broker statement. It's a lot of stuff. I mean, like, it would probably take you a day to do it. And you might want to like remove any personal information from them too, right? So now if you're using the good stuff, right? Like if you have Jigsaw Journalytics, then it's quite easy to go in and do that if that's all your trading happened on that. But if he's doing it all on cryptocurrencies, right? He's probably on like 3 different exchanges, and then the way that the exchanges report your profits are kind of weird sometimes, and they're not going to match up between them. Like, it's a bit of work to compile that information together. It's true. But that's why person that's that successful is not very likely to say what he's saying. because they know exactly what Seth's going to do. They're going to say, okay, prove it. And then he's not going to want to prove it. And then we all just deride him. And just go, okay, you're probably a 15-year-old kid that's just lying to us, right? So you just don't say anything. Brannigan Barrett thinks the dollar seemingly is saging a short-term pause, which will enable a strong bounce for gold. 1680/1700 is the spot to be a buyer. Well, it is at 1699 right now. I hope you're right, Brannigan, because I have like a tiny bit of gold still. It's a tiny amount, but still, it just bothers me that trade has gone so wrong. They don't want me to get filled at 28. No, sir. I feel like he's playing with me. I've had too many of those large orders, like exactly the wrong spot. What do you think of Brannigan's work? Well, I really like the guy, first of all. Like, I love his accent. I just love the posh. I love listening to him. And he has so many valuable, like stories, lessons to provide, etc. I often see him make calls on Twitter, based on some of them are good. Like, I don't like this trade. Okay, well, we're having a pause in the dollar, and that could affect gold. Like, it is a solid setup for a trade for sure. Except for that, is the dollar really staging a short-term pause? I don't know what he's seeing that makes us think that, because I'm looking at it, it's still up at 108, right? I mean, it's getting volatile, but it's still really high. So I'm not quite sure why he thinks that the dollar is going to turn around. But I guess the thing is that it seems to me that what you get in the industry, and this happens all over the place, is like, different parts of the industry might know different things, and they don't necessarily correlate their stuff, and so they don't always know what they don't know and what they do, right? Is kind of the problem that I see. So it seems to me that Brannigan does believe in technical analysis. He thinks that he can pull out technical analysis and find levels where it's going to bounce and so forth at certain places. And he probably sees a lot of evidence for it in the trades, and you might even be able to go back and say, see here, it did this here, and maybe pull out stats. But I think that the problem is that like Axia is large enough that they could cause those bounces all by themselves, right? So two competing prop shop traders. But like, that's the thing, is that what I like about Brannigan is not necessarily like his success at a prop shop, right? I guess a better way of putting that would be this. I really want Brannigan Barrett to read to read trade quotes and prices markets under the Microsoft. My mouth is too dry. Hold on. Let me try that again. I really want, good grief, the new squawk is talking about something in the UK again. Okay. I really want to see Brannigan Barrett and the rest of the guys at Axia to read Trades, Quotes, and Prices Markets Under the Microscope by Jean-Philippe Bouchot, and then see what they say after that. Because I occasionally will see the guys, primarily on Twitter, but I will occasionally see the Axia guys say things about the way that markets are that I wouldn't necessarily have to be pivotal to their strategy. But I think that they would think differently if they had read that book. Right. So it comes back to that whole thing where it's like when people have had success, maybe, sorry, I got distracted there. Sometimes when people have success, they don't necessarily completely understand why. And that's why you often have a lot of situations where people get lucky. I don't think that that's the case with Brannigan Barrett. I think that Brannigan Barrett understands the markets really, really well. And I don't think that he probably doesn't realize himself how much of his success has to do with his understanding of market and how little of it probably has to do with the actual technical analysis, right? But for some reason, that's what you end up talking about, right? Yeah, I can look up that name. See, the thing, Hydro, is that when you talk about Bitcoin stuff, so one of the big biases that you'll kind of see in like a data set, right, is that you can have timing luck, right? So there are just situations where if you just bought it or sold it at the right time. Remember, there's this whole thing where JP Morgan did a study where if you lost, over the last 10 years, if you just lost the 10 best performing days over that 10-year period, you'd make half as much, right? Okay. So because of the fat-tailed nature of the markets, timing luck can have an outsized impact. So, and when you're talking about Bitcoin, that's very significantly the case, right? So you could have a person that they were bearish on Bitcoin, and so they made a ton of money this year, right? And I've seen this over and over again. I mean, pretty much every cycle, I'll have somebody come in, they're bragging about how well they did in cryptocurrency, and then the next change in the markets, they get destroyed. I've seen that like 3 or 4 times now. People, and I'm literally talking about people that were making hundreds of thousands of dollars from doing it too, by the way. There was a guy after the 2017 run, I can remember specifically, that had literally made like $300,000 off of it, I think. And then when the crypto winter came along, or it was a second crypto winter, he got wiped out. No, Hydro, if you're posting links, we can't see them. If you're posting links, you have to put spaces or just remove the periods from the link and make it so that, I still have to type the .com part in it. Otherwise, YouTube sees it as a link and it doesn't even show it to us. Like, you see it on your screen, so it's like, but I haven't seen any links or anything, right? So I'm just kind of commenting on it like, well, okay, what if I went and I clicked a link that would show a wallet there and it was really, really well, it was really, really good. And that's why I'm kind of being like, well, there's kind of problems with those kinds of results. So I don't think that would really prove the thing that you're trying to prove. Right? If you came in and you showed me 5 years worth of scalping on the 10-year, then I would be impressed, right? If somebody can come in and they show me they've traded 5 years in the 10-year treasury and the net profit over those 5 years is positive, I'll be impressed. If the net results of those are like have a Sharpe ratio over 0.5, then I'm going to be like, you have to teach me. You have to show me how you're doing this. Worship your feet, etc. I'll do anything. You want me to spend $10,000 for you to, I'll do it. If you could show me 5 years of risk-adjusted returns in the 10-year treasury in intraday trading. Totally. 100%. No, you're not posting them, Hydro. Are you even fucking listening, dude? I didn't not... So, like, again, I'm not moving. That's where the goalpost has always been. Okay, listen. If I've ever moved the goalpost, or I've tried to move the goalpost, because like what I just did there was I kind of brought the goalpost again. Here's my claim. Show me a 5-year risk-adjusted return. That means, what was your return after 5 years? What's the Sharpe ratio on it? What's the percentage adjusted risk return on it, etc. Right? And then we're going to analyze that strategy, right? And then I'm going to be like, oh, okay. This person is a very successful trader. Okay. Now, for you, the bar is a little bit higher, right? Because you're not just saying, oh, well, I have a good 5-year risk-adjusted return. You're saying I'm one of the best traders in the world based on the performance that you're claiming, right? I can only make that on a spreadsheet. Yeah, probably. if you can't show all of the broker statements, yeah, probably. I mean, like, look, let's try and take this from a higher level view. Okay, what's the freaking point? What's the freaking point of anything? Listen, this is the problem that the kids have these days. The son has his problem. Stepson, if you're listening, seriously, think about this. This is a problem. We have access to so much information. A big part of life was not knowing things. Not knowing things gave wonder. Not knowing things gave you a reason to go out and do things and to learn more things and to try and become better and so on and so forth. You know, what is the purpose of life is a question that humans have grappled with for millennia and has motivated a great deal of action and thought centered around that thing. But when you come into this world where it seems like we know everything, then what's the freaking point, right? So you get all these kids out there that are like nihilists now, right? There's no point to life. You know, it's just like, what is it that makes me feel good or is interesting to me right now? And then nothing feels good or interesting to you, right? Why is that? Because you've decided that life has no purpose. And when people don't feel like they have purpose, that's what they do, is things are not interesting to them. You don't get the same chemical rise that you get out of it, right? You have to have purpose, right? What is the purpose, really? What should our goal be? What is the ultimate goal, the bigger picture goal here, right? The bigger picture is to build society and make it better than you left it. To make this world so that the people that come after you have better, easier, more enjoyable lives, right? That's really what it all comes down to, guys. I'm telling you, you can have all sorts of goals in life, and you should go and do things. I've done fun things. I did, used to be big into the clubbing scene and was a DJ and stuff like that. Do all of that sort of stuff and everything, right? But if you don't have at some point in your life a mind towards how am I going to improve society and make things better for the generation that comes after me, you are wasting your life, and you will not be as happy as you could be otherwise, because you are simply missing the whole point that is like ingrained into the human experience. I said after 11, now it's not the time. The guy called me at the wrong time again. It's okay. It's okay. It's okay. Anyways, okay? How do you make things better for the people behind you, okay? That's not an easy thing to do. It's not an easy thing to do at all, right? This is what we, as a society, struggle with, trying to figure out for the last all of human existence, essentially, right? Well, our ancestors have figured out a lot of different things, and we've kind of built a culture, and Western culture in particular has been remarkably successful. And we here in the United States and the Western world in general live in what is essentially the most prosperous period ever, right? So how do you build systems that continue to improve upon that? Right. Well, we have the system that we already have, and then we can make changes. And one of the bases of that system is empiricism. We don't just take things that people say for granted, especially if they're making extravagant claims, because when we do that, all we're doing is we're making ourselves vulnerable to hucksters and scam artists, right? So yes, if you're going to come down and you're going to make a claim of some sort, you have to be able to find the evidence of it, right? You go and find all of the broker statements and compile them into a big long PDF file that we can look at. And then, yeah, put it in a spreadsheet so that we can do the statistical analysis on it. And then we can look at how good it actually is. But I'm just telling you, based on the way that you're behaving, that it's not as good as you think it is, even if you can actually show me accurate data. Because you don't seem to be aware of where your limitations are. But I gotta get going. You can send me stuff on Discord, Hydro. Well, I can't. You seem to be incapable of putting the links in the live stream, so you're gonna have to send them to me on Discord because I gotta go. All right, guys. I will see you on Monday. Stay profitable.